because what the game these financial planners play is they only show you charts going back to 1981. And this is when Paul Volcker raised rates. So since then, we've been in a down cycle in interest rates. And you can say the stock market always goes up, right, if interest rates are always going down. But what happens when interest rates start going back up? And usually the cycle is about 30, 40 years. So if you look at charts of the stock market going back to 1927 to 1980 or 81 adjusted for inflation, it was pretty much flat. But see, they don't tell you that.
Right.
They just cherry pick the data.
Of course.
They want to give to you in order for them to collect their fees.
But something even worse happening is the last crash was, let's say 2008, when the repo market reversed and all this stuff. And most of these financial planners and real estate brokers, all they know is a rising market.
Yeah, that's right.
Since 2008, we've been nothing, and happy days are here again because they kept dropping interest rates. Real estate went up, stock market went up, bond markets went up.
Yeah.
And we were just talking to Raoul Powell, and he said the problem with that is that the bull goes up the stairs.
Yeah.
The bear comes out the window.
Or I've heard the elevator, but the window. That's a little bit more dramatic, isn't it?
No, but Raoul Powell says when it comes, it's 4 months. Yeah. That's how fast this bear is going to go out the window. So anyway, you invested in property. Where was your property?
In Kansas City.
Perfectly.
Yeah, and my objective might help some people kind of think about real estate or assets in a different way. The first goal that I had when I retired is just to look at my monthly expenses and say, how can I get my money to cover those expenses?
Yeah.
You see? And so how can I get my cash flow to cover these things? So then I know that I'm never drawing my savings down.
Right.
And I think it sounds easy and it sounds commonsensical, but very few people just kind of connect those dots and realize that if they can create enough cash flow with their portfolio to cover their monthly expenses, that is when you're financially free.
Yeah, that's a cash flow game. Out of the rat race, all this stuff, you got $10,000 a month coming in, you got $7,000 expenses, $3,000 net, you're free.
The cure for inflation is not more money. That's usually the cause of inflation or consumer price inflation. The cure for consumer price inflation is more stuff.
Yes, produce more.
You got to produce more stuff.
Yeah, produce more oil. Guess what?
Yeah, so if you're just taxing the people who are producing, that defeats the purpose. That's going to create most likely higher consumer price inflation.
That's what Sarah's complaining about is the baby formula. They got so many regulations they can't produce it here.
Well, yeah, everybody's blaming this baby formula regulation on supply chain, but that's not actually what's happening. It's over-regulation.
Yeah, right.
So
we just imported how many millions of cases of baby food? The United States, the greatest nation in the world, had to import baby food. Something's wrong.
Yeah.
Well, look at our trade deficit. I mean, we're importing everything. We're consuming so much more than we produce, but we've been doing that for decades.
We can print money to pay for it.
Right, but we can't print food, we can't print energy, and at a certain point, if those countries that we're getting that from say, you know what, we're not going there anymore, we're not playing your game.
But isn't that what's happening?
Yeah, so a great example is let's look at China starting to do deals with Saudi Arabia, and I think most likely Russia in yuan. Okay, so most people just see that and they say, oh, it's kind of the deterioration of the dollar. But no, there's far more to it than that. So before that happened, China would need dollars to buy the food or the commodities, the energy they needed.
The oil.
That's right. So they needed to earn those dollars. So that's why they would export all these items that we buy at Walmart, because they want our dollars so they can go buy the oil. So they're in a very difficult position there. But if they start doing these deals in yuan for oil, now all of a sudden they can print the currency to buy the oil. They don't have to earn it. You see,
smart for them.
But what that means is now the United States doesn't have as much leverage over China as it once did.
Right.
So China can start gradually. It doesn't happen overnight, but they can start to tell the United States to pound sand. And if we can't get our stuff from China, where are we going to get it? We're not producing it here internally in our domestic economy. So then, where do we get it? We get it somewhere else at a much, much higher price, if we can get it at all.
Well, I'm a macro guy too, but there was a guy named Muammar Gaddafi, and he told the U.S. pound sand also, we're going to sell our oil in dinars,
Yeah.
not dollars, and he disappeared.
Yeah. Yeah.
I guess you don't mess with the U.S.
Yeah, but I don't know that you can compare Libya to,
I understand,
to China. It's a different ballgame.
You don't mess with the money.
Yeah.
And that's when we come back, we're going to be talking more about this, because you were talking about the crypto and the
Central bank digital currency.
Central bank and the IMF SDRs and all this stuff. They're playing games with money big time right now.
Well, they're trying to control it. It reminds me of the quote that we were discussing actually the other day from Kissinger. Remember?
What was that?
Who was the main influence
Right.
on Klaus Schwab, who runs the World Economic Forum in Davos.
I didn't know that.
Yeah, we could tell that story when
Yeah.
we get back from break if you want me to. But what his quote was, if you control the food, you control the money. Or excuse me, if you control the food, you control the people. If you control the energy, you control countries. And if you control money, you control the world.
That's right. And that was what Rothschild said. I care not who makes the rule,
Right.
as long as I control the money.
Yeah. And I think that's part of their objective. And we hear them out just explicitly talking about it
And
at
here's-
Davos this week.
That's real gold, and that's real silver. This is $2,000. That's concentrated money.
Yeah.
And this here is about $35.
Yeah, but more importantly, this has maintained its purchasing power over the last 5,000 years. So you can buy just as much stuff today with this little gold coin as you could have 5,000 years ago.